most of your investments are what's called late stage, right? Why do you like those stages? Is it because of the nature of your fund, or what's
Well, I mean,
behind that?
I would say, for example, Square was classically late stage. It was the pre-IPO round. We would have
Yeah.
invested early. We could have gotten in. We were a very young firm.
Mm-hmm.
So Twitter was quite a late stage investment, which was our first investment.
Mm-hmm. Which stage was it?
Twitter was a secondary purchase of common shares out of employee. Right.
Okay.
We have a couple. But the way I think there's a couple rules of thumb. So if you're looking at a very large scale enterprise deal, an enterprise platform, say a Palantir, a Fastly, something like that, which is also one of our companies that went public.
Right.
You're probably going to invest later because those companies take a longer time to build enterprise presence in the US, which is a very important proof point. You're probably not going to get enterprise buy-in. For example, you're not going to get a Japanese bank to buy into a US platform unless they have some enterprise traction at a peer, a Citibank, a Morgan Stanley, something like that. And those companies just have long sales cycles, and it takes a long time to get them up and running.
Right.
We have investments in a company like Insightly, which is a transplanted Australian company to the Bay Area, and we invested in the B. And they're a small medium enterprise CRM platform, and they have a freemium model, so people pull it down from all over the world.
CRM, customer relation management.
Yes.
Yeah.
And so they had hundreds of customers in Japan. When we met them, they were $3 million with Series B. So when you get into a smaller footprint of a technology or a less complex technology, then we can go earlier and earlier. Now, what's happening? One of the trends that's happening that's very important is that the ties from Japanese organizations, banks or retail or whatever, their ties to their activity, M&A activity, and ties to U.S.-based subsidiaries is stronger and stronger. So now what we can do is we can actually work with companies earlier on testing the Japanese market by testing them with a subsidiary in the U.S., which didn't used to be very useful because they didn't talk very much. And that's actually Japanese organizations are becoming proactive on using those entities as test beds. So basically you can test and penetrate the Japanese market without changing your behavior as a domestic player. And then once you prove traction there and you make sure that you've created the proper threads back to Tokyo, when they're ready to expand to Tokyo, you don't have to reinvent and re-educate the executives. They've been watching this thing for years. That's super critical to accelerating the growth.
I see. Interesting. And so you mentioned about kind of moving to Series A deal to, but I suppose you have LP too, right? So when you're fundraising, what was the kind of thing you told to your LP? You have like Line, I guess, Daiichi, some of the best Japanese companies, IT companies too. What thing you told them? Like, we're gonna invest in late stage companies that's low risk, or what's the thing you told them?
I mean, we tell them that it's readiness stage with I won't go into, there's a lot of legal jargon in those.
Sure.
The message that we're sending them is just what I told you, is we're looking at readiness stage.
Okay.
And the bias is toward mid to late stage, but what we've been communicating the last decade, year by year, is wow, these opportunities are getting earlier and earlier. And as we go out with what will effectively be our fourth vehicle, our Roman numeral 3 fund, we'll be more clear with them. And they understand this as well because they're getting more sophisticated and they're looking more and more aggressively. They understand, like, we've got to be in there much.
Very interesting.
Right?
I've been seeing some, So I've been seeing some, a very old venture capital firm in the Valley, or the famous one, actually going into earlier stage deals these days. And I was really interested, why that's actually happening. But is it maybe because what you said, the readiness of global expansion is becoming like kind of toward like early stages?
There's a little bit of that, but there's also the tools available to entrepreneurs right now to build a company are remarkable. And if you go back to, this is hard, you know, I don't want to sound like the dinosaur, but let me give you a quick dinosaur story. You know, back in the mid 90s, when you invest in a software company, you'd give them a couple $1 million and they'd go away for a year and they'd write their product. Like that's how long it
just for server and stuff, right? Yeah.
Spaghetti coding a product, and then okay, you come back and maybe they got a pilot company, and you're like, okay, this looks like it has promise. Let's give them a few more $1 million in their Series B, and they're going to get a couple customers. And their C, they're going to get the vertical, and the D, they're going to get another vertical. And if all these execute, then they'll go public for $150 million, and they'll raise 50, and then they'll grow to whatever they grow to. All right, something
going
like
public at 150 mil. You're talking about American companies,
150, 250 million in revenue with 30 to 80 million. Oh, sorry, in valuation with 30 to 80 million.
Sure.
Sure. If you go back and look at the number, it was a tiny business, right? And now you can see Series Bs that are, you know, the Series B of Zoom was 180 pre, and that would have been an IPO back in the day.
Right.
So if you look at it now with the tools available, with the internet as a marketing and sales platform, what ends up happening in the A is it becomes very clear very quickly who's going to win and not win. And once you see a winner, there's an inclination for the early investors to pile in, to maintain ownership. Why give it away?
Right.
So there isn't the syndication culture that there was many years ago, because the risks are taken out of these deals so fast because you see the traction. So if you don't get in early, you don't get in. So that's part of it is you can see the sophistication earlier. And the other part is just basic survival. If you don't get in early, it's really hard to get in.